Hi everybody, my name is Adam Meyer. I am back with another video, and I'm going to go over why the market went up yesterday and what we can expect for the future. So yesterday we can see this big, massive buy up candle that we're seeing here. You go down to like a 1 hour time frame to still see this massive buy up. It's all because the Federal Reserve said that they're going to focus on not killing the economy and really not raising the rates to a certain extent. So they said, my colleagues and I do not want to over tighten because cutting rates is not something we want to do too soon. We can also see that there's layoffs happening like DoorDash and AMC Networks also plans to lay off 20%. So we're seeing like Target slow down, we're seeing Walmart slow down, we're seeing like inventory actually slow down in a lot of these big retail companies, and other companies are already laying off. So what happens with the Fed, everything is delayed in time. So like the Fed will raise the rates and then it's delayed to cycle through the economy. So that's why they're saying that they don't want to do something too soon. They don't want to over tighten. So this is the federal funds rate. So this is what adjusts the interest rates for like mortgages and whatnot. We're starting to go higher. As you can see here, we're above what it was back in like 2019, 2018, somewhere around there. So we're getting up there. So they're raising these really, really fast to get it down. So they want to get the inflation down like really quick, as fast as they can. But we got to keep in mind that this is all uncertain and it can affect the markets over time. So if I go back over to the chart here, we're seeing a nice relief rally because the market likes to look ahead. So the market will go up based out of good times 6 months ahead. So the reason it went up today is because the Fed wants to slow down on interest rates, and that's going to allow companies to have more certainty of generating revenue and whatnot. That means if we continue to have inflation go down, the market should continue to go up. But what will happen is if inflation decides to still go back up higher, the market's going to come back and turn back around because the market is thinking that the Fed is going to have to raise rates even higher again. That's why it's all uncertain. That's why I like to dollar cost average into the long term. So I have a lot of different companies that I'm dollar cost averaging into. There's one that I recently just started going into was the fund with Meet Kevin. So you can go on his website right here. I'll link it down in the description. And the ticker symbol is PP for purchase power. It's an ETF with all the companies that he has in there. And this is his list of companies. He's got Apple, Autodesk, AMD, he's got Tesla in there, he's got Trade Desk. So a lot of companies that he really believes in, so he does a lot of his research. So I'm buying this ETF and I really trust in him and all these companies that he's investing into, and here's all the weighted averages within there. Well, another one I'm investing into, I've gone over it before, is also the S&P 500, which is this one. So the ticker is VOO, and then also QQQ. So I raised those up even more. And then I also bought some individual stocks that I'm dollar cost averaging into every single week as well. But that's just for long term. So in one of my previous videos, I mentioned Bitcoin about how I'm looking for buys within this area because we're seeing something called SMT divergence. So go back to the last video if you really want to see in depth of what that is. But it's smart money technique divergence. So basically, we're seeing a lower low here on Bitcoin. As you can tell, here's a low and then a lower low. But on Ethereum, we're seeing a low and then a higher low. So these are correlating assets. And when we're seeing a more bullish Ethereum, but a more bearish Bitcoin, that's actually an indication that smart money is entering within here, and we could anticipate a certain type of rally. It doesn't actually predict how far it's going to move, but you can anticipate something to happen. So that's what I was talking about within my last video about how I was looking for buys within that area. I also mentioned it in my group chat, the areas about where we were buying in and the areas I was looking for a price to come to. So we did hit these areas. So in my group chat, I mentioned that we had a low here and then a high here, and I measured that range with a Fibonacci retracement, as you can tell. And it came down to the golden zone at the 62 to the 79% for the accumulation area. So that golden zone and accumulation area are the same thing. So that's where I was looking for buys to then take up to here. So what indicated the buy was the SMT divergence as number one. Number two was the MSS right here, which is the market structure shift. You can see above this high right here, the wick came above there, so it shifted the structure higher. And once the structure shifted, I'm looking for a retracement down within the Fibonacci, down within a fair value gap that's sitting right here. I mean, this is getting kind of intense about the technical analysis, but there's a gap sitting there, so that gap got filled as well, and it came into a bullish order block right here, and it came up to hit the target of the weekly gap that's sitting up here. If you go to the weekly time frame, there's a gap that's sitting up into there, so that was the weekly target up within that range. So all that coming together, it all correlated together to then show the buy that happened there. But for long term, I have people asking me, what do I think about where's it going? I really think that we can consolidate for a while. Like, we have a lot of range that can still come down into, down within here. But honestly, I would like to see it hover in this range for a while, if even come up into here or even up into here. But I want to see it bounce around. I don't really care about what it does anytime soon. I really think it's going to mirror the S&P, and I think there's just so much uncertainty in the overall market for anything to happen. So Goldman Sachs even thinks that we're going to have the next year the S&P and even the NASDAQ possibly even just accumulate sideways for a while based on all the uncertainty. So like right now, as the beginning of the video, I was talking about, okay, the Fed might be relieving everything. Okay, inflation might be going down, so we're going to slow down on the rates, but that doesn't mean inflation is going to go down. So that means there's going to be uncertainty in the market. That means the market's going to be more likely to go sideways and not have massive rallies to crazy all-time highs again. That's not going to be happening probably until the Fed says, okay, we're printing money again. We over-tightened, blah, 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 blah. But if they over-tighten, the market needs to fall down. So there's a lot of uncertainty right now. And Bitcoin too, like we're probably not going to see all-time highs within the next year, but I could be wrong. You never know, honestly. But I wouldn't be surprised to still see 12K or even 8K. I'm even saying lower numbers now, just based on where we are in the cycle. But I do want to see some consolidation, and then coming into 2024, 2025, I want to start to see something like this again, just like it happened in 2020 where it was sideways, then the COVID happened. So we don't really need to have that happen again, but I want to see a rally higher, one more break of structure here in the weekly, and then this is where it's time to like load up. That's personally what I'm doing. It's not financial advice, but I want to see this happen again. So I just want to see this whole consolidation period right here, just like this, a whole consolidation period right here, and I want to see a massive retest and then a massive move higher. We might even have a bounce here, and if we bounce and hover up into here, the 26K to 22K range, and then we start to see that bounce up into 2024, 2025, and then the rally through those years to all-time highs, that's ideally what I want to see, but that's what I'm keeping my eyes on. But right now, I'm just dollar cost averaging. I'm buying the dip, buying the dip, buying the dip, buying the dip. If it comes lower, I'll buy the dip, but and I'll trade it back and forth, buying and selling this trade from the other day. You're buying here and then you're selling up in here, just a short-term little trade, not really trying to make crazy money, but I'm more of a long-term investor. I like the long-term investing, but I do like the trading as well. But that's mainly what I focus this YouTube channel on, is the long-term investing, just because I think it's easier to really understand it, because trading is a big psychology game. So I'm going to wrap this all up here. Don't get hurt in the markets. Love y'all. Take care.